Bitcoin's final accumulation has begun. Wall Street has flipped, and essentially, no one has noticed. Something huge has changed, and not just in the charts, but in who is showing up. The same firms that used to avoid crypto are now quietly building inside it, and the speed of it is catching a lot of people off guard. Over the past few weeks, we've seen a wave of moves that point to one thing, and that is institutions aren't testing the waters anymore. They're going all in. And every time Wall Street moves in, the window to get positioned gets smaller and smaller. So by the end of this show today, you'll see how that alignment we're seeing just changes absolutely everything about the entire setup for Bitcoin, and why this next phase could be the last time we ever see prices at these levels ever again. So let's get into it. So we're going to start off by checking out A16Z's State of Crypto 2025, where their report begins with one line, and I quote, "This is the year the world came on chain," they say. And the numbers back it up too. Over 70 million active crypto users are coming on every single month, which is up 10 million since last year. 716 million total holders worldwide, and 3,400 transactions per second are happening across major blockchains, which is 100 times faster than just 5 years ago. And stablecoins alone moved $46 trillion in the last 12 months, which is more than Visa and PayPal combined. That's global money flow. And here's the real signal. The infrastructure that institutions need to operate at scale already exists. And that's why Wall Street is suddenly racing to plug into it. Now let's check out what Wall Street is doing, because we see Fidelity's announcement to trade and custody Solana might sound small on paper, but it's one of the biggest signals of the year. And they're going to do this because clients have been asking for it. The same funds that once limited exposure to Bitcoin now want access to the broader crypto economy, and Fidelity is giving it to them. Meanwhile, Rowe Price just shocked the industry with its multi-coin ETF filing. And this isn't a passive Bitcoin tracker. It's an actively managed crypto fund that aims to outperform by shifting between assets, including Solana and XRP, depending on market conditions. And that single detail, and it changes everything, because it means institutions are no longer content with exposure to one asset. They're getting educated. They want alpha, and they're coming after it inside the crypto world, inside the crypto market. For decades, T. Rowe watched money pour out of its mutual funds and into passive ETFs. And now they're entering crypto because it's one market where active management might actually win again. We see BlackRock built the rails, Fidelity has scaled custody, and T. Rowe just added strategy. That is the trifecta that turns Bitcoin's dominance into a multi-asset flow machine. And when you add that up, we're talking about hundreds of billions in potential inflows that won't just lift Bitcoin. They'll lift the entire top tier of this market. That's why again and again, you'll hear on my channel, and if you're new, I'm here to tell you, but you'll start to notice this trend. And what I bring you, I only bring you top tier tokens. I share the news with you, yes, because the news tells us what's going on and we interpret it. We don't take it at face value, but you would know we only follow blue chips here. And those are the tokens that are going to get lifted up with all of this incredible global Bitcoin mass adoption we're seeing. Let's talk about the quiet driver behind all of it, which is stablecoins. In 2025, stablecoins became a global macro force, and there's now over 300 billion in circulating supply. And more than 1% of all US dollars exist as a tokenized stablecoin on public blockchains. They've already settled $9 trillion in adjusted transaction volume, making them the fastest growing payment system in the world. And now stablecoin issuers hold over 150 billion in US treasuries, which makes them one of the top 20 holders of US government debt. In other words, stablecoins are propping up US liquidity at the same time the Fed is tightening. That's the hidden bridge between crypto and the traditional system. And whenever stablecoin supply expands, crypto prices follow. Every 5% monthly expansion in supply has triggered a 20 to 40% move in higher Bitcoin within 2 months. And right now, that supply is rising again. That's why institutional desks are getting positioned earlier, because they know liquidity always moves first and price catches up later. And we hear Standard Chartered's research team says any move under $100,000 will likely be Bitcoin's last dip, the final accumulation zone before a $200,000 target by year end. And they're tracking 3 things. They're tracking gold to Bitcoin flows, Fed liquidity tightening, and technical support at the 50-week moving average. When those align, liquidity easing, gold outflows, and stablecoin expansion, gold historically ignites. And that's what's happening right now. That said, the fastest growth in crypto this year isn't happening in trading. It's in the on-chain economy. Predictions markets deepen, tokenized treasuries, they're all exploding. Let's just look at the prediction markets, for example. In October, Polymarket and Kalashi processed nearly 3.7 billion in trading volume, split almost evenly. Kalashi, backed by Citadel and Sequoia, added Solana integration through Jupiter and now stream event data on-chain with Pyth. And Polymarket raised 2 billion from ICE, the same parent company as the New York Stock Exchange. And they will soon integrate with MetaMask and Hyperliquid. And both platforms signed multi-year licensing deals with the NHL. Their prediction markets will now appear during live hockey broadcasts. Talk about fantastic marketing. So that's mainstream distribution. It means prediction markets just crossed from crypto culture into mass culture, which is what is needed for crypto to truly grow, infiltrate the masses, and go viral. Billions in volume, real users, real fees. That's the difference between hype and product market fit. Now, behind all of this, builders are flooding back into the ecosystem too. Solana's developer base is up 78% in 2 years, and its applications generated $3 billion in revenue this year alone without a parabolic phase. And its planned upgrades are set to double its capacity by the end of the year. Fidelity's direct support for Solana trading shows that institutional demand is already here. And we see Ethereum's layer 2s are scaling quietly in the background as well. Mega ETH's compliance first model signals where the next wave of institutional grade infrastructure is heading to next. Each upgrade, each expansion, each compliant launch adds more proof that crypto networks can operate at the same level as traditional markets. The difference now is that institutions are already building on them. And I told you in the intro, there's something happening beneath the surface. Well, here it is. While retail sentiment has cooled off, the largest wallets on chain, the long-term holders, the early miners, and the institutional custodians have quietly resumed accumulation. Go figure. We see exchange reserves for Bitcoin and Ethereum have dropped to multi-year lows, meaning more supply is leaving exchanges than entering. And when supply drains, while new institutional products go live, that's how supply shock begins. So when I say Wall Street flipped, I mean it literally, because the same players who once ignored Bitcoin are now positioning for yield, exposure, and on-chain infrastructure. So as we close out today's video, it's very interesting to notice It's been 17 years since Bitcoin's launch, and it seems crypto has officially entered adulthood. As I've been saying in my past videos, that the space is finally maturing. We see institutions are building products, stablecoins are powering global liquidity, and the macro conditions for the next cycle are lining up. The next rally won't be fueled by memes or momentum, though there will be memes. They'll be the bottom feeders, though there will be some good ones, as there already are. Anyway, the next rally will be led and will be fueled by capital allocation. So if you're watching this right now, remember, we're standing in the final accumulation phase before the next ignition. Because when Wall Street flips, the game doesn't reset, it accelerates. And that's what we're seeing right now. So stay plugged in, stay sharp, stay believing. Listen to technical analysis. Yes, it gives us a general glimpse of the market. But I believe we have broken away from the 4-year cycle. Our timelines have expanded and Bitcoin is only going up and up and up. It will be worth $1 million someday. In the meantime, there is some market manipulation to some extent in suppressing the price so that it can be on sale for as long as possible, for as cheap as possible for these biggest players of the world, but they can only suppress it for so long and it will eventually go parabolic and it'll take the rest of the crypto markets, especially the blue chips, with it. So this is what we'll be tracking here at my channel Monday through Friday. I love you guys so much. If you're new here, welcome. I've seen so many of you commenting in my comment section. I will get back to you as soon as I can, and I'll catch you guys here in my video tomorrow.